Hey everyone, Valeria here from Services by Valeria, bringing you some important information from the One Big Beautiful Bill. Now, please remember to stay up to date with the latest tax information, changes, and news. Go ahead and hit that like, follow, and share button. Now, let's go ahead and get into it. Now, today we're going to talk about the no tax on overtime, which I'm pretty sure everybody's heard already. Now, this deduction directly reduces your taxable income by allowing you to exclude a portion of your overtime pay from being taxed. Sounds good, right? Now, if you earn overtime pay, this deduction lets you exclude a certain amount of that pay from your total taxable income. So, for example, like say you're a single filer and you earn an overtime pay for the year of $15,000. You can deduct up to $12,500 of that amount. And if you are married filing jointly, you guys get a $25,000 total deduction. So if you guys get that, then good for you. Now, I'm sure you're asking, hey, how's this going to be calculated? What counts as overtime? Well, the deduction applies to the extra pay you earn while working overtime. So this includes the extra amount you get paid above your normal rate. So basically the time and a half that you get, you can only deduct the half part of that pay, not the full time and a half. Now, how is it going to be reported? Okay, so basically all employers are required to report your qualified overtime pay separately on your Form W-2 under box number 19. Now, this is basically to ensure that taxpayers can identify the exact amount of overtime pay they received during the tax year and deduct it accordingly. Now, in the end, this will basically put you in a lower taxable income, which may place you in a lower tax bracket, leading to an overall lower tax rate. Now, this means that you may end up paying less in taxes on your income. Now, does this benefit all taxpayers? I'm going to say yes and no, and let me explain. This deduction is accessible for anybody who itemizes their deductions or takes a standard deduction, making it basically available to just about anybody. However, if you are a salaried employee, this can be different for you. For example, non-exempt employees are entitled to overtime pay for anything worked over 40 hours that week, right? And that's time and a half as well. Exempt employees, such as administrative and professional rolled employees, are unfortunately not eligible for overtime, and therefore they do not qualify for the overtime deduction. Now, I want to get into deduction limits because this is important. Now, these are really, really important because even though just about everyone who works overtime gets to qualify for this deduction, there is going to be a limit and it will diminish if you go over that. So if your modified adjusted gross income is $150,000 for single filers or $300,000 for joint filers, your tax preparer or yourself will then have to reduce the deduction by $100 for every $1,000 that you go over that amount. Meaning, depending on your total income, you may or may not be able to deduct the full $12,500 for single and $25,000 for married filing joint. Now, the no tax on overtime deduction helps to lower your taxable income, which can lead to a smaller tax bill and a greater financial relief for individuals working overtime. The new deduction is meant to help hardworking individuals who put in extra hours, make their overtime earnings go just like a little further by reducing their tax burden. Now, remember, for more specifics, feel free to reach out to Services by Valeria. We are available year-round to keep you up to date on the latest tax laws, tax changes, and challenges, and that may or may not affect you and your family. For now, I want to thank you for listening. I want you to take care, and God bless. You have a wonderful